The ethical investment market has grown in sophistication and diversity in recent years due to the number of people seeking to invest in this way. But there is still a number of myths that surround ethical investment, and this video is intended to dispel some of the common ones. The first myth is that investing ethically means you might be sacrificing your returns. In performance terms, funds with an ethical mandate have achieved returns over the longer term that are similar to, and sometimes better than, their counterparts that don't have a specific ethical mandate. The reason for this is that companies that tackle ethical issues like corporate governance, better working practices, and resource scarcity are positioning themselves for sustainable success. Over the long term, being socially and environmentally responsible can enable companies to be better placed for future growth. Another common myth is that ethical investment reduces the choice and expertise of available funds. This may have been the case in the past, but not anymore. There has been an expansion in the number of ethical funds and a growth in the expertise to manage these funds, which has led to a greater opportunity to generate returns. But what about the costs of investing ethically? Aren't they higher than non-ethical investment? This is another myth. Our experience is that you do not have to pay more to invest ethically. Investors don't have to sacrifice performance for principles, and they don't have to pay more for the privilege. Beckett Asset Management provides a social impact portfolio, which is our interpretation of an ethically managed portfolio. It aims to invest in funds with a conscience and encompasses 4 ethical criteria: human rights issues, environmental abuse, animal testing, and arms. 70% of the equity and bond holdings within the portfolio adhere to these criteria, and the remaining holdings are defined as ethical by Financial Express, which provides analysis on investment decisions for the financial services industry. The social impact portfolio also contains a number of property funds which are not normally defined as ethical. However, our research identified some property funds which have been awarded a Green Star by the Global Real Estate Sustainability Benchmark in recognition of their credentials pertaining to environmental impact and sustainability, and these are included in the portfolio. In terms of risk, the social impact portfolio's mandate allows for equity exposure between 20% and 60%, and therefore we classify this as moderate risk. To find out more about Beckett Asset Management's social impact portfolio, you can visit beckettinvest.com and click on Wealth Management, or call 01284 754 00 to speak to one of our independent financial consultants.